Good morning and welcome back to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. I'm going to go over a few lessons today with you. So we got the broader markets down a bit here after the holiday. Hope you all had a great holiday, 3 days off. You know, we love trading, and we actually, while we enjoy an extra day off here and there, it's kind of a little bit of a bore when the markets aren't open. We just enjoy being involved in the trading and so on. So if you love the markets as we do, you're in the right place to learn what we do and what we do every day. So we got the S&P futures here rallying off of the low after this little double bottom that was made here and up into these widely followed moving averages. The blue ones are 20, simple moving average, and the green one is a 50. They're widely followed. They're simple moving averages. The ones I've used all the years, this one is a 200. I've used exponential, weighted, and optimized, and so on. And back to the simple ones, I think they're the ones that work the best, but it's a personal choice. No magic to any moving average, and you know, don't ever get involved into the hype of certain types of moving averages or certain numbers, whether it's Fibonacci or whatever. You know, just stay consistent in what you do and keep it simple. So anyway, here, the rally off of the low here, and this is a tough place right now as far as for swing trading. For day trading, it's perfect because we're at an inflection point here, these moving averages. Now, they took out this prior high, which is a positive, but it came down real fast and hard, as you know. And it hit this support area where the bottoming tails are, BTs, right? Well, that's support in the 200 MA, and made a big rally above this high. So you can tell, you should be able to tell by the extent of this move, it did some damage to the weekly time frame. I don't have time to look at that right now, but take a look at it on your own. And so this move is in opposition of this weak one, this one being strength, and it took out this resistance. So now the question is, does it roll over and come back down to the low? Or does the bulls step up here and this consolidate a bit and turn back up and make a measured move back up to the high? We need more information. So if you're a swing trader, probably the best thing to do is sit on the sidelines for a day or two and let's see what unfolds. Now, if you're a day trader, this can present and does present opportunities for us. So as prices came up, and you can see in the other chart, so I have several areas of price resistance marked off. One of the lessons that we teach master traders in the Master Trader Technical Strategies course is taking x-rays into the higher time frame and seeing where the pattern is. And what we see is this little congestion there, which is this area where the opens and closes are overlapped. And this is where some sellers eventually came in and they begun to roll over. The next area of resistance was way up there. So now what we can do as day traders, we wait for the intraday time frame to double top and start to roll over and a trend change. And from that point, we can trade it from this time frame. What was support becomes resistance. You can short it up here with the appropriate pattern. In addition, once this rolls over, that provides you a short-term bias, an intraday one. We know what's happening on the daily as I explained it, and we can move. This is my favorite shorter time frame intraday, the 5-minute, and looking for sell setups. And now you see the sharp move down. This is what we call a climactic type of a move to the downside. Sets up a buy setup. However, the resistance is up here, and the daily looking, like we're not so certain how much it's going to come down or whether it'll reverse back up again. So we need to let this build up some more resistance, which it's doing right now. Let me give you a little bit more of an advanced type of education. This move down created what I call a price void. So there's no resistance until it gets up here, right? You can see that, common sense, right? So how do we deal with that as an intraday trader or just looking at these patterns? We could apply this to weekly and daily time frames for swing trading, but right now I'm just teaching you the concept. So what we want to do is to wait for buyers and sellers to have a battle and create a new resistance area. Meaning it could come up here, and that's where we could get a sell setup, or it could do what it's doing right now. It made this swing high. It's retested that swing high, and see that little topping tail right there that's forming as I speak? Sellers are coming in to test that area again. So the point to do is wait a little while here, and the market's not open yet, to see how this develops, and then that could set up a new short to the downside if it breaks through this support here. So this is applicable. We're looking at the futures, but it's applicable to anything that you can trade. It could be oil, it could be ags, it could be Apple Computer, it could be anything. And so what we do at Master Trader is use these technical strategies, putting together multiple time frames and patterns, and we can apply that using option strategies or just trading the underlying itself. But we put the odds in our favor with using what I'm explaining to you. Now stop at Master Trader. We have a free course there. Take a look at the education that's available to you that you want to take it to the next level. Subscribe to the channel. Lots of education here that Dan and I put out, so you can learn a lot right here as well. Good trading, everyone. We'll update during the week.